Eric Muathe with Muathe.com. Here today we want to take a look at how the stock market can be very confusing. For example, here's a stock TX, and this is all data monthly. Let's take a look at how the stock has been behaving since 06, and you can see it has this, always seems to have a period where it's breaking out and fails. Looks like it's breaking out here, fails. Looks like it's breaking out here, fails. Here again, a little bit of an uptick and a failure. So now that it is moving higher, you have to question whether it is going to hold up above this current level. Because as we know, stocks tend to repeat themselves, and this behavior here raises a huge question as to whether one can actually play the current breakout. Now you see this in a lot of stocks, just don't know whether you should even take the chance. But here's another way of looking at this. We go back to the previous break here. So this break was good enough to bring it off the highs in, let's call it about mid 08, so off the highs there, and went into a major drop from about 34 to the lows here of $4. I mean, that's a huge drop, right? So that was a serious break. So of course we know that if we draw a line from here, every time we find resistance on this line, we know the stock is telling us we need to get out. You can see here double top on a monthly closing basis for the highs there and there. And then again we hit that level there for the highs there. And of course, since those highs, market went on a major drop. We came back in, let's call it late 2013, early 2014 for the highs there. And here we are in 2016, late 2016, and we are trying to break out here. And the question is, should one play this breakout? Now keep in mind, it could easily be a trap, because even though it seems like it is breaking out, should it turn around maybe this month or the next month and shows uniform activity rejection, just like it did here, then this could actually be a trap instead of a buy situation. So what does one do? We see that the stock has a history of failing. Breakout failure, breakout failure, breakout failure, here again failure, and now we are here. Are we gonna fail again? So I'll show you what you can do. Just set a line on the sand. And so if we take a look at the 3-year monthly, let's take a look if the stock meets our minimum requirement A, just to make sure that it could actually move higher. You can see here it is already close to 3-year highs here, so which is what we want to see. So RSI looks good, meets the minimum requirement, stock is moving to 3-year highs. Here we can see that also one of the MACDs is moving to 3-year highs, if not both MACDs. So we can say that the MACDs and the RSIs meet the minimum requirement. The stock looks good from that perspective. Now if you take a look at the weekly, what you see here is that the stock is breaking out above the recent weekly closing high, and this is just slightly above 25. So let's just say at about $25, 25, which is this weekly closing high. What you can do, because of the problems on the monthly chart, is you can own this breakout as long as the stock is trading above 25. So as long as the stock is above 25, you can hold it and see whether it is breaking out for the first time in many years above the monthly resistance line. Or if it does not hold above that level and it drifts lower, so if you find the stock trading below 25, you want to get out. The reason why you want to get out is go back to that long-term monthly chart, is because it could actually be confirming this resistance line on the monthly chart. So you can own it as long as it's above the red line, which means you can own it as long as the stock is trading above the recent weekly closing high of about 25. Otherwise, failure to hold above this level might suggest that now it is confirming resistance around the red line, which could be a problem. So above 25, you can own it. Below 25, the monthly chart says that potentially with a confirmation of resistance here, the next swing trade could actually be lower if it cannot hold above the weekly breakout level of 25. Eric Muathe with Muathe.com. So this is how you can play the stock, knowing that it has a lot of faults in it, by drawing a line on the sand. Here the line on the sand is at $25. Peace and Blessings. E-A-C-S. Woo!